Hey, good morning. Billy and Jeff here with Crossroads Consulting. Today, one of the services that we want to talk about is workers' compensation. So, through our partners, we have multiple ways that we can provide workers' compensation. Different industries have different classifications, different ratings, the states have different requirements. Here in Florida, you can have a, a low risk business and have up to 3 employees before you have to get workers' comp. If you're in the construction trade and you hire that one employee, even though they're part-time, you have to have workers' comp. So there's a lot of rules that go on with it. And one of the things that we do is we talk to new businesses, existing businesses about their workers' comp and see whether your claims history are good or you're having problems with audits. And we try to utilize our technology and services, whether it be a professional employer organization or whether it be one of our payroll vendors that allow us to tie it in together and make it very efficient. Pretty much everybody should have workers' comp. If you have one employee, if they and you don't have it and they have a claim, you're on the hook for it. So and God, I remember when we started way back, a roofer used to be like $76 per $100 of payroll. If you're not understanding that, we'll dive into that later. But with the management of risk and claims and all that, that rate's like $8 a hundred now. It's really come down. So a lot of people that are starting businesses today are like, holy cow, workers' comp's really expensive. But if you go back 20 years, it was really expensive in Florida back then. Every state has their rates. Some states are monopolistic, like Ohio. I believe Washington State. That means, the state provides the workers' comp, and private carriers like,
Zurich.
Zurich. That's who I was looking for. They don't have a policy in that state. So, workers' comp is a necessary evil. It protects the employees. It protects the employer.
Yeah, it can be quite expensive depending on the type
Yeah.
of business that you're in. Trades, anything that's a high risk component. There's a lot of elements to the workers' comp arrangement. We do like the PEO model in a lot of cases because it's pay as you go. They can provide some discounts on workers' comp. But probably the most important thing with the PEO model is you're under their workers' comp policy. So any claims that you have, it goes against their workers' comp policy. So your experience mod is kind of put to sleep for a while. But the thing about the PEO and having their workers' comp, if you have a shock loss claim, a high dollar claim, uh, your rates don't necessarily go up because the PEO, in many cases, absorb those claims, or maybe they'll raise you a little bit, but not to the extent that you would if you were on your own. So there's some elements behind the private workers' comp market or the PEO market that can really benefit an organization. There's things out there. Sometimes the risk is so substantial that the PEO is not allowed by their carrier, whether it's Zurich, whether it's other carriers, they're not allowed to write that particular risk. But then they can go to the open market and you can still have the PEO model without the workers' comp. And if you get to a point where you're spending $1 million plus on all of your liability policies, commercial liability, business liability, auto, workers' comp, we have resources that can look at things like captives, like single parent captives, self-funded type workers' comp programs. The key is it really is taking the time. And this is really the challenge with business owners, is taking the time to look at these different types of insurance products.
Yeah, and back in the day, PEO was the only way to go if you wanted pay as you go workers' comp, right?
True.
And pay as you go means every time you run a payroll, your workers' comp is included. So at the end of the year, your audit is nil or none, right? Because you know exactly what your payroll is. Through technology and the way the insurance companies are now working with payroll only companies, that same technology is there. So we have options, whether it's PEO, payroll only. you can still bundle your workers' comp with it, minimize your audits at the end of the year, streamline those payments every time you run a payroll or monthly, and it makes it very easy. So for more information, check out our link below at xroads.com. And thank you for listening to Crossroads Consulting.